If you are looking to start investing in the stock market, but unsure of where to get started, or you don't know about the entire process, or you're just nervous about it, then this is the video for you. From simplestepinvesting.com, and I'm going to share with you some insights on what my experience has been. So if you're new to my YouTube channel, go ahead and subscribe. Make sure you don't miss out on any future videos, and make sure if you find this video helpful at the end, go ahead and hit the like button. Now, before we get started, I wanted to give a quick shout out to the 1029 Barbershop who did a fantastic job for my hair. I thought I was going to be on camera to show off my holiday do, but I'm on travel. I don't have any of my equipment set up and the lighting is really bad. But Miss Nene owns this shop in the Hampton, Virginia area that's not only for the typical barber services, but also locks for those that have them, and they welcome children too. So I promised I would give a quick shout out. So if you're looking for somebody that does full service in the area, be sure to check out the 1029 Barbershop. So let's jump into today's episode. First, we're going to start with some stock market basics. So being an investor in the stock market allows you to buy and sell shares in their company and you become a shareholder. Now, whether you were investing in any type of business or product, there's always risk and reward. Stocks go up and down in this market, and you should be aware of that. It's not a straight shot up or a straight shot down. The other thing, and this is probably overlooked quite often, is that you want to have an investor mindset versus a trader mindset and game plan. And by that, an investor is looking to buy and sell shares of a company for a long period of time. Now, long is relative, but I'm talking years, 5 years, 10 years, 20, 30, 40 years even, where a trader is looking to buy and sell very quickly, sometimes literally seconds to maybe up to a couple of years or days and weeks. So time that you're holding the asset, as we like to say, is the big factor in having that investor mindset. And the most important is do not use money you can't afford to lose. And that's going to be true with any investment. And the same is true for the stock market. So who can invest? Well, essentially, you can. Anyone that's 18 years or older, and I'm speaking to mainly U.S. citizens, can invest in the stock market. Children technically can't, but parents and guardians can help set up things for children, and these are called custodial accounts, and we'll talk about that at a different time frame. But children typically aren't doing the investing, but parents can definitely set up these custodial accounts for children. Your child may be a young investor, and you can help teach them. The other thing I wanted to mention is a type of investment, Roths for minors. And I could kick myself that I missed this when Auntie's Angel started working. Now, Roths are a type of investment vehicle for retirement, and they are based on what you've earned that year. Now, there's other limits for how much you can contribute, but a Roth can be set up for a minor once they are working age. When Auntie's Angel started her first job when she was about, 16, I could have opened up a Roth for her. And I missed that opportunity until she was a senior because it's based on earned income, because started her retirement account. And that's something we'll discuss also a little bit later, not in this video. So why would you invest in the stock market? There's so many different goals and what people use. It's retirement, it's pay for college, pay bills, living expenses. It's whatever you deem you want to do with this money. Some people choose to pass it on to heirs. They're going to pass on to their children or grandchildren. Another popular reason is to make money when you sleep. This is like one of the best things if you are focusing on what we call dividend stocks and ETFs. ETFs is just a bundle of stocks, but they pay you a dividend. Think of it as you go to a bank, it's earning interest or dividends. It's the same thing with investing. You can have stocks and ETFs that earn dividends for you. Some people choose to use those dividends, like I said, in retirement, college, or whatever purpose that they have for that money. Another thing is that the barrier to entry is low, where a lot of people are believing like, oh man, I need thousands of dollars. I'm going to show you another slide that the barrier to entry is low, and you can put it on autopilot. You don't have to sit there and read charts and do all this hard, complicated stuff. You can set it up, get it going, and maybe monitor it once a quarter, even half a year, something like that, whatever works for you on autopilot. Now, I want to show you this not to scare you, but to show you what the cost of waiting is. I have this in another video where what would happen if you started investing $100 in the SPY, which is an ETF, starting at 6 months of age. What would that look like if you did this every month until age 67? And so, as you can see over here on the left, that's 1.6 million. But look at the difference between 1.6 million and waiting until you're 18 even to open up an account, and it gets worse and worse as we go on. Now that is not to discourage you, but you could obviously increase how much you're doing, as well as choosing, let's say, dividend earning stocks and some other things that can help grow your overall portfolio. But the point of this is to show, don't wait. In fact, the more time you have, the less money you need to actually start to invest, because you have compound interest working for you. Now, that doesn't mean that if you're 40 and 50 or even 60 or more, that it's too late. So here are 3 myths about investing: that you need a lot of money. I just invested in something like a little bit ago. In fact, I missed the really low entry, which was $1.40 per share. But you can invest in things as low as a couple of dollars that are per share just to get started. The more you can invest, obviously, it's going to help you in the longer term, but it doesn't have to be something that is super expensive. So let's say at the same time you're like, hey, I see this stock or ETF that's maybe like $500, and you're like, I don't have that, but I want to start investing in it. Then you can purchase what we call fractional shares. You're buying a piece of it over time, and you just keep adding and adding and adding, and it starts to add up over time. The second myth is it's too complicated. Well, guess what? You can set it and forget it. You can set it up on autopilot so that you are purchasing or you're depositing money over time. Maybe it's on a schedule, and then the system that you're choosing can purchase whatever stock or ETF or bundle there for you, and it just keeps building over time. And you can set alerts if you're doing a little bit more manual or a combo, but it's really not as complicated as it seems. And just like I was saying before, the other myth is it's too late for me. It's never too late, because even if what the money you're earning goes towards a bill, maybe it goes towards a vacation, you might not be able to retire off of it, but it's a piece of your overall portfolio. Maybe you have retirement funds from your job, or you have Social Security, or whatever the case may be. It's never too late. Plus, you may be able to pass some of that on to your family, your heirs. And so it's never too late. Now, what does the overall investing process look like? Essentially, it's a couple of steps. You're going to open up an account, you're going to fund it, and you're going to pick 1 or 2 ETFs, and then you're going to do this on an automatic basis, or you can do a lump sum maybe and just let it sit. You're going to look periodically over time and let it grow. It's purely up to you, and you can do a combo. You can do this lump sum and then contribute monthly, quarterly. So here's a little test that I want to give you. Do I think it's really complicated? Now, while I said you don't have to read charts, I want to make a point with this video. So humor me. When we look at these charts, without knowing really anything, you can kind of tell what's going up. B is kind of going a little sideways here, so maybe we'd wait or something. But C has definitely been going up, and maybe it's starting to go a little sideways here. And A, I don't know what it's doing. It's kind of like going kind of crazy here, but it came down a lot, and maybe we'd be scared to get into this. So which one would you pick? I definitely would like for people to respond in the comments on which one you would pick to invest in, if any. And here's the drum roll. The answer is, guess what? It's all the same company. It's Microsoft as of January 1st, 2025, but they're on different time frames. And that's some of the things that we start to learn about if you want to be more than just set it and forget it. If you look at a chart, I would want you to know enough not to be scared. In the A chart, that's actually on the minute time frame. And on the B chart, that's on the weekly time frame. And C is on the monthly time frame. And so without giving like this long lesson, the short version is it's like taking a trip that's 6 months to 9 months away. You're not going to look at the forecast for next week to see about planning your trip and what you would pack for a trip that's 6 to 9 months away. You would be looking at other like in 6 to 9 months from now. That's the same thing with investing. We're not really going to look at the minute chart and get scared because there's a pullback, as we call a retracement. We would be looking at the weekly and the monthly time frame. This is a good investment. On that weekly chart, it's pulling back, which is great because we want to buy low and sell high. We want to get in when the price is on sale and buy more and then let it ride high and then maybe sell some later on. So I hope you really kind of enjoyed that lesson, but that's essentially what we do with our investments. So for our 2025 goals, I'm hoping you're going to join me in our new community. It's under development right now. I'm going to be opening it in a few weeks. Those that sign up to be notified will get a early bird bonus. You're going to get live training with me for investing, and there will be a Q&A with it. So in the community, which is going to be about participating, not just me telling people things, but participating, you're going to learn about risk-free investing. Yes, risk-free. This is about like what we call paper trading, where you can get the lay of the land before you even set up an automated way of investing, or if you want to be a little bit more hands-on. We're going to talk about getting your first 100 shares. There's some things you can do only once you have 100 shares that really take it to the next level of investing. You don't have to, but you can. We'll talk about selecting good companies. We're going to share our own experiences as a community to learn from each other, because no one person definitely knows it all. So that's the overall process of investing in the stock market. I hope you definitely join me on this journey for 2025, where we start to build and grow our stock portfolio, not only for ourselves, but for our children at simplestepinvesting.com. Otherwise, feel free to comment below if this has been helpful to you. Again, a thumbs up would be greatly appreciated on the video, and I will see you later.